But how do you win the Robbins Cup? Oh, ICT, you're all over the place, but you keep coming back. So I started thinking to myself, okay, how can I do this systematically where running up 11,000%, but I don't want to do the full year because I don't like December because I want to have the holidays off. Like you see me enjoying it now. I'm not making YouTube videos, but I'm having a whole lot of fun on Twitter. But, and you're learning, so don't complain. Okay. There's no refunds here. The bottom line is this. If you can find a way that systematically has a process of seeing setups that form continuously, okay, just think for a second, because this is the big disconnect that everybody has about competing and trading and doing both sides of the fucking market, trading. If you know the bias, and I've already told you how to map out the year in this whole presentation here today, if this idea of everything I've mapped out resonates with you, I want you to sit down in your charts and think about what happens if you can get 6 handles a day. That's easy. Do 3 in the morning, 3 in the afternoon. You don't even have to have a full pool. What does that mean? Get in your entry and go to your full terminus target. 3 handles is shit. It's nothing. Like that's nothing. That's nothing. Like I could literally almost close my eyes and throw a fucking dart at a wall and put stickers all over the wall and have yes, buy, yes, sell. And whatever I hit on it, I can still get 3 handles out of that just by static price action alone. It sounds unbelievable, but it really is that easy. 3 handles is nothing. It's just static price action alone. You can get that. Now, if you know when it's likely to have the order flow in one direction, aiming for a particular high or low intraday, and you're going in, you're trying to get 3 handles in the morning, 3 handles in the afternoon, you have a recipe that you consistently aim just for that. You're not trying to get the full range. You're not trying to get 10 handles. All you got to do is simply do that and let money management do the heavy lifting. If you average 11% a week, which I know some of you are like, what the fuck? 11%? Like, come on, Michael, come on. 11%? That's a lot. Actually, it's not. If you're in, number one, if you're competing and you have a system that has lots of setups, I have lots of setups. I have a repertoire and an arsenal that is absolutely unmatched. I have shit that nobody's ever seen before. I'm going to share some of that next year. But you only need a small little piece every single day. And here's what fucks up everybody. They all want to rush to the high end of that leaderboard and stay there and taunt everybody. They want to get to a safe high ground and they all want to get there real quick. That's the built-in advantage. You got to play the long game. The long game is taking small little pieces, even on one contract, and let it build up each time. Each time, build it up, build it up. And when you get your 3, you stop. Wait till the next session. Get your 3, stop. Close the fucking shit down. Don't trade anymore. Everybody else is going to be pushing. They're going to be buying and selling in the same day because they think their fucking system does amazing things, and they end up fucking drawing down. Everybody does that. Everyone loses their ass that way. Don't be like them. Know what you're looking for, aim for it, hit it, walk. Done. You ever see the movie 21? I love that. I love that movie. It's classic to me. I look at that as how a trader listens to the analyst. They had a process. They go in, they have a system, they're counting cards, they know what they're looking for. When the table goes cold, they got to get up. They got to get the fuck up because the probabilities have done what? They shifted. You're not likely to get a good run. Get up. Well, when you get your shit, you stop. So 3 handles in the morning, 3 handles in the afternoon, or if you're capable, 6 handles in the morning and you're done. And just do all the heavy lifting with the money management. A more skillful way of doing it would be aiming for 12.5% per week. It's like 60% a month, compounding over and over and over again. And you can have it done in, I think, if I'm not mistaken, I think 10 3/4 of a month, like a little less than 11 months. But you have to have the discipline to stop. You have to stop. And if you have a losing trade, stop. Don't go in again. You can't use, I got to fix it. You can't fix a flat. Okay. You just eat that and go home. Everybody else is going to be rushing. They're all going to be rushing to get out there and try to make a big, huge splash like Mr. Kevin Stufflebean. And he did. I was impressed. I was like, man, this guy came out the gate. Look at this shit. Up there, 1,300%. I was like, this guy's going to fucking do great. But then his first losing trade that I was able to really pay attention to when I was tracking it. Dude, you lost like 400%. Like, that's a lot. That's a big hit. And then when that hits, you want to do what? Got to get it back. But you just don't make it back with 400%. You got to make more than 400% to get that back. See, that's the problem with you when you go in a drawdown in your competition. Drawdown in competition is exponentially higher than just simply trading for income. So there's a whole different paradigm shift that needs to take place. And claiming you won 4 fucking competitions when nobody was really aware of those competitions, that's kind of bullshit. And you didn't really compete against people that are really doing it. If you're looking at Robbins Cup, there's a lot of names that keep showing up each year. Man, I got respect for that. These people, they're not talkers, they're doers. You don't see them out there beating their chest. They sometimes sell shit, but guess what? I think they earned it. Robert Miner. I've never talked to the guy. I've never met the guy. He's up there a couple times. I haven't seen him this year, but yeah, I've seen his name up there multiple times. Many, many, many times I've seen his, and he didn't place in the top 5 in the end of some of the years, but I did see him get up there. I got respect for that man. He's doing it. Like, he's literally doing it. I don't know how he trades. I never looked into it, but I know he does some kind of education. But there's another guy out there I think he's done it 4 times. He's doing ads now on YouTube saying that he's the only 4-time winner of the Robbins Cup. That's cool. That's great. I know he's selling a course or whatever, and I got no problem. You proved it. You've done it. But if you find a way to simply look for 1.5 to 2.5% each trading day. Now, that's a lot for a new trader, but I'm talking to the folks that's been around the block for a while, and you know your model, you've been doing well. How many times have you ever sat down and thought, this is all I need to do, and stop? Forget how far it can run. Forget all that. Forget doing buying and selling in the same day. Forget all that. Strip it down to the brass tacks. And unfortunately, in competition, you're going to be using 2% risk. It's not a lot, but that 2%, it adds up quick. If you're taking low-hanging fruit, systematically targeting it, boom, getting out. Boom, getting out. You can do it with 1 contract. And it becomes 2 contracts. Slow, but it gets you there. Now, think about it like this. $10,000 is the minimum requirement to get into the futures division, right? $10,000. Folks, we're just talking math right now. Okay? It's just math. If you need to make 12.5% a week, what does that translate? What does that translate into? $1,250 end of week. That's your goal. Now take that $1,250 and divide that up over 5 trading days. What do you have to make each day? $250. Divide that in half on 2 sessions. What do you have to make? $125. But ICT, I might not be able to have the margin to do 1 full contract of the S&P. You don't need to. You can trade currency futures, bond futures. See, you have to have an arsenal, a repertoire, a bond system that nobody can fucking touch. Oh, yeah. Oh yeah, baby. I have shit that fucking Iron Man would want to buy from me. Stark Enterprises ain't got shit on ICT. But strip it down to the chrome. What do you have to do? 125 bucks the first week, each session, or $250 each day. Or if you're a swing trader, get 2 trades aiming for $675 each. You break it down modularly, bite-sized pieces. And when you hit it, you stop. Everybody else is always full bore. Push, 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 push. You got to be the master of the long game. Let them break themselves, and they will. They're all going to want to try to be the best, real quick, fast name on the leaderboard. Every year they do this, every single year. And the person that always gets up there first never fucking finishes. In fact, many times, the very first 5 people, watch what happens in January when they first start posting it. Do it, keep track of it. The same first 5 people, you never see them again. You never see them again. It's usually around, I don't know, April. That's when you start seeing a consistent, okay, these are the same faces we're seeing. They just rotate in and out which spot they're in. Sometimes they'll fall off the board and come back on with crazy drops and increases, which means they're doing what? They're gambling. They're not good traders. They're gambling, which in many aspects, one can argue and say that's what Larry Williams did. And I guess in a certain way, yes, that's true, because he admits in his own words that he's not a good trader and he relied heavily on money management. And I know he's never done it again. I would have liked to seen him do it again in the Robbins Cup, but he's done it in his other accounts, outside of the competition. And I don't give a shit. It doesn't have to be in a Robbins Cup. If you've done it there once, you've done it. But if you get 12 and a half, or if you do 11% each week, you got to do less than $250 a day. And what happens in the second week? Is it much more that you have to do? Nope. Just simply do a spreadsheet and do the math on it. What you have to do each day, break it down, and you'll see it's been there the whole time. All these fucking barkers, these people out there talking their shit. Oh yeah, I'm going to join it with you. Dude, it's so easy to do it. Do it. Join it with me. I will love fucking smoking your ass. I'm going to do a whole lot more than this, but I'm giving you a recipe to go ahead and do it. You want to try to beat Larry Williams' recipe? Or not recipe, but his results. I mean, it's a fucking great number, 11,000%. That's a lot. But here's what's going to happen. You jokers that have never handled real money, as soon as you start crossing, if you can get this far, as soon as you cross 6 figures, 200,000 if you get that far, we're talking about numbers you probably have never handled before. And you'll get reckless, and the losses will feel like mountains laying on top of you. And paralysis will kick in. Fear, performance anxiety, all that kicks in because now they see your name on the board. And you got to stay there. Or what would they think? All that shit, that forces a trader to trade and follow the logic of sound money management and controlling themselves. And those that can't fall to the wayside. That's how you measure a trader, not some bullshit over leverage, no stop loss, discount broker shit. I'm not impressed by that. I've never been impressed by that. I've done it in my own life, and it's not impressive. I wasn't impressed when I was able to do that. I'm like, it was fucking stressful. I'm glad I got through that. But if we're going to talk about competition and trading, we're going to go to a real arena, use industry standard margins, where everybody has the equal playing field, and you cannot YOLO. Can't do it. And now for the Forex division, you only got to do 25 pips a week. Everything I gave you when I was on baby pips. What? Yeah. Do the math. do the math. It's all there. See, you've complicated all this shit and looked at things, looking at indicators, what indicator setting, which tool I use here, all this shit. It's all math. That's all it is. If you have a cookie cutter, and that's what you're doing with your model is your cookie cutter. What you're going to do every single time, okay? As long as you have dough, that's your money, you're going to press that cookie cutter into the dough. And when you lift that cookie cutter up, what are you taking out of it? A cookie cutter shaped amount of dough. Each time you're doing the same fucking thing. You're not trying to get a Santa cookie cutter, pressing it down and waiting for it to come out in the shape of a present or a candy cane. No, you're expecting the same result each time. You're not trying to demand that cookie cutter does anything other than what it's shaped to do. Think, folks, think. How many times has your ideas morphed once you press the button? You change your opinion about where it's going to go, how far it's going to go. It might not get there. That's a proof and sign that you have traded before you're ready. They're all corrected by doing whatever I taught you in the beginning of this presentation and other lessons too. It's not important for you to win competitions, but I know some of you young men want to do it. The interest in wanting to do it, I'm interested in watching. I'm interested in seeing it. I want to see it. Like, I really want to see it. Like, I love watching other people trade. I love it. I love watching what they go through and if they're able to more or less articulate what they're feeling. I love that because I'm a person that, like, if I read a book, I'm in that book. If I watch a movie, I'm in that movie. And like Caleb, one of the things that him and my youngest son, they had this thing with them. They want to talk during a fucking movie. Okay. And that breaks the illusion. Like, I'm in there. What are you doing? I'm out here. I'm here. I'm saving the fucking world. And you're here talking to me now. I'm back in the movie room here. What are we doing? You got to shut up and let me be in this moment. Well, when you're trading, like, you have to be completely immersed in that and filter out all the distractions, all the bullshit. And if you think for a moment you're going to be able to do well and be part of the community in social media or flexing and doing this, it doesn't work like that. It does not work like that because you're going to carry that stimuli back into your next trade. And whether it was support by people that love you or from people that are trying to see you fail, it's all going to have an impact on you. And you're going to be thinking about that as a factor in what your next trade result is going to be versus, I have my cookie cutter. I'm pushing it into the marketplace and I'm going to retract the amount of dough that it's designed to take out. And you have to be systematic about it. And it has to be very, very low end, easy to get. Not this monumental 20 handle day. I got to do that or I'm not going to win. That's bullshit. You don't need a lot. You just need time and consistency and let the money management do the heavy lifting. And you got to be prepared to slowly see the equity curve go up. It'll still be going up fast. Not in the beginning. It'll look like nothing's going on. It'll be other people are going to shoot by you because they're over leveraging. Your first week may not be 11 or 12.5%. It might be just 10%, or it might be 8%. Who cares? Or maybe it's 5%. Who cares? The long game. That's what you're playing. And you're going to let that pan out. You're going to work on one side of the marketplace. You're not going to do both sides. You're going to trade in your bias. That's it. Where's the order flow? That's it. And you're stopping. Every person that's going out there trying to get every possible trade, they are fooling themselves. They're trying to trick their mind into thinking that more is better. And what happens if they do get that big payout or that big windfall? Okay, but what's the chances of that really happening? Remember, you're in a competition. Everything's going to be squeezing and pressuring and just, it's going to be a lot. You might think you're ready right now, but if you don't control your perspective and control your emotions. I know the folks don't believe there's an algorithm, but he's going to try to make 40 handles. So he's doing 2 to 1. You don't need to do the math on all this bullshit that people write these books about. Oh, you need to have this. I can make money and he can make money and you can make money with a 1-to-1 ratio. And I don't give a fuck what anybody says, okay? Because you don't know what you're doing when you first start. And these jokers that write books and courses and horse shit, they're not making profitable trades either. And here's the thing. All these are multiple setups. You have to have 5-to-1. I teach that as a thought process, and you'll see that in the core content lessons of my mentorship videos I put on my YouTube channel. Stop sending me requests to join my private mentorship because I don't do that anymore, and I put the lessons up on the YouTube channel for free. Go and fucking join them. Learn from it, study it, and it is what it is. Stop paying people to learn what I've made available for free. You're getting it right from the source, and I'm ongoing teaching right here, again, for free. But the multiples that people say you have to have or you're going to lose, for instance, you got to have 3-to-1 minimum, or your risk of ruin is this, that, and everything. Because they argue that you have to have that type of ratio in your trading where you risk $1 to make $3 minimum. If you can't do that, don't take the trade. Okay. That's a religion. Okay. They say I'm a cult leader and I'm running a cult here. Okay, I'm going to turn this shit around on you. If you think that you have to have a 3-to-1 to make money, you're a fucking clown. Okay. Because what you're saying is you're ignoring the idea that you know or don't know the outcome of the next series of 5 trades. Even with that 3-to-1, you're assuming that you can't have a fucking losing streak of 10 trades. Think about it. When I was coming up, I had that. And I had a model that worked because I was trying to push the button more times than I should have. That's the part. That's the thing. That's the real troll in your trading. The impulsiveness. The times that you want to push it faster than it really is in the chart. That's where the real work is, and that means knowing where the price is going. Why should it behave that time? That's why I have time aspects to my trading. I cut out all the bullshit. And like I was showing you the other day with the FOMC rate announcement thing, why don't I trade those days? Why don't I tell my students to trade those days? Because the absence of precision, how else plainer does it need to be? They're highly manipulated at that time, just like non-farm payroll, just like CPI. You know, these big events, they're highly manipulated. So there's manual intervention, and you can't trust your chart. I don't trust mine. So you have to wait for that initial sandstorm to pass, and then go in there and do your business. But you don't think that way until you've been burned lots of times and lose money. But once you have learned how to keep that from happening again, and the effects of having lost money, you will appreciate sound logic and rules. I don't have a problem with rules. I'm a rule-based, principle-based thinker. I have protocols, procedures. I have a routine that I follow. There's a method behind my madness. Even though it may seem like it's scatterbrained, I know exactly what the fuck I'm doing, when I'm doing it, and many times weeks and months before I even do it. Do you have to be that fanatical about it? No. So to remove all the bullshit that people say about me and what I teach, I have literally gave you a 60-minute interval 3 times a day where you can look for a setup. The setup requires you to know where the draw and liquidity is. You don't even need to know the bias on the day. Like, you don't need that. Just look at where we have come prior to that time. Is it more likely, because we've been going up, who's profitable? The longs. Okay. Is there a relative equal lows? Is there a singular low that hasn't been traded to yet? Because even if the day is going to be higher, they're likely to see it do what? Retrace, run some stops, and then accumulate those sell stops and go long. Smart money would be long, and then run the daily range higher, even still. Like, you don't need a bias. But to help you understand, to be principally oriented, have a rule-based idea, you should be focusing on developing a bias, because there's going to be days where you don't want to trade. You don't want to trade. And I teach you that. They're very generic days. They're not hiding from you. And when I talk about it on Twitter, oh, this is a day I'm not really excited about, or this is something I wouldn't touch. Otherwise, it's very static days. Days right before non-farm payroll, any FOMC day. Don't trade ahead of CPI, but after CPI, you can trade it. I mean, it's not rocket science, but many of you don't want to be told, don't do this. And many of you don't like to be told what to do.